I bring you unusual activity at 3 o'clock Eastern or thereabouts. I guess 3:04 today. So pardon me for being a little late, but there's been a lot of good trade. So I've been somewhat distracted. And we had Leon Cooperman and good discussion on the halftime report today. But this is about 3 at 3, so let's get right into that, shall we? 3 at 3 brought to you for January 28th, 2021. I am Jon Najarian. Our disclaimer that they make me say every day is that this is for educational and informational purposes only, full stop. All investments involve risk. I bet a lot of people that were trading over at some of the shops that got shut down today didn't understand maybe that all investments involve risk, but there's also going to be a lot of investigating into why those places elected to shut down. Nonetheless, let's get into the rest of the presentation. The second part of our disclaimers is that this is our intellectual property, folks. So if you're feeling like you'd like to use it, please ask us first. Thank you. Here's OCC, that's the Options Clearing Corp, total contract volume. And as you see, yesterday, look at that 52-week high, by the way, folks, 60 million contracts. That, again, is a lot of the WSB folks, a lot of the Wall Street bets folks. It's an awful lot of folks that are making investments in the markets. Instead of going into stocks, they're going into options. And look at that. The January average per day is 43 million contracts. That's so big, folks. That's just crazy. It's huge. And it's delightful, too. And a lot of you have come to us over at Market Rebellion to learn how to do it a little bit better, perhaps. And we appreciate each and every one of you. Here was a look at some of the top sectors today, and this was just as we were about to turn 40 million contracts on the day. Wow. And that was only at 2:30, so we had an hour and a half to trade, and we were already approaching 40 million. As you see, equity funds, software, auto manufacturers, computers, internet, those were some of the top traded areas in the markets. We track not only the contracts, but we track the transaction totals. In other words, how many transactions to get to that total, and thus get to an average print size. So when we get to double-digit print sizes, we're pretty sure that we're following institutional paper in those names. That's just one of our trade secrets. Let's take a look at this one, SBSW. This is a mining stock down in South Africa, and stock was $15.40 when we noted unusual call, buy, buying. Some of you on Twitter were reaching out to me and I guess trying to give me a hard time saying, all you do is copy other people's trades. First of all, no, I don't. Usually I find a smarter way to trade it than they trade it, because frequently they're buying something like this, out of the money call. 1750s in March with stock at 1550-ish. Is that the smarter trade? It could be. I want to move those odds into my favor, though. So I want to buy the 15 strike and sell those 1750s. Why? Because I'm not asking the stock to make a huge outperformance, just looking for nudges to the upside. And if it does that, I make a nice return on my investment, and I hit a lot more for average when I'm swinging for singles and doubles rather than home runs. I'm not that YOLO trader. I've been at it for 39 years, so I'm plenty happy with the life I've got. I don't know what I would do with a lot more money. I just like to make a nice return every year, and I like working, and the markets are exciting. So for those of you who do want to put your whole paycheck on red or black, feel free. That's just what I need. Here is Stillwater Limited as it was 1568. So it moved up by about 18 to 20 cents from the time we talked about it. Still, a 9.5% gain on the day, looking pretty good, but still a far cry from 1750. I'm just also encouraging you, if you're new to us, to go to YouTube and If you type in Market Rebellion into YouTube, you could subscribe to our channel. We appreciate that. It is completely free. You get my brother Pete, The Take. It goes up live every day at, I think, 9:30 Eastern Time. I also, or 9:30 Central. Uh, I think it's 9:30 Central. So anyway, that'd be 10:30 Eastern. But anyway, if you go there, you won't miss any of them because all of our videos are up there. Our podcasts are up there. My 3 at 3 is up there. You get the idea. If you go to YouTube and you type in Market Rebellion and you subscribe, you might also want to go up in that upper right corner and click that little bell so you get an alert every time we post a new video to make sure you don't miss it. Chef, how about this one? They're buying April 35 calls with the stock at 29.33. Chef, 29.33, April 35 calls. They paid about $2 for these. They sold the April 40s for about $1 to $1.60. So in other words, they're putting a small amount of money on the table, which is smart, I think. And they have mitigated time decay and volatility compression. Although since these are April options, not as worried about time decay for an April option contract. But nonetheless, I think it's a smart trader who's doing this trade. I bought something closer to the money. What would that be? That's the 30 strike and sell the 35 strike. That's the way I like to trade it. Now, again, you guys have to decide because what I'm giving you is informational and education. You decide how you want to spend your money, how you would like to establish the trades that you will be confident in. There's Chef's Warehouse as it moves up about 70 cents from when we entered. Bang. Let's hope it keeps going. It's about a 4% move so far today. Love that. Let's talk more about this one tomorrow, I hope. And this is Jamie Rajkowski. He is the founder of Wall Street Bets. I am honored to have Jamie join me on my podcast today. If you'd like to join us, you can go to Market Rebellion right now and sign up. It will be free, and we will splatter it everywhere. We're going to break the internet with this one, folks, because this is from the Wall Street Journal today. Wall Street Bets founder reckons with legacy amid stock market frenzy. He talks about that. He talks about seeing the slow motion car wreck that is trades in GameStop, which I'm sure he loved, but then that overreach perhaps by some of the brokerages that shut down Wall Street Bets traders on Reddit from coming in and buying more. Wow, there's a lot to talk about with Jamie. You can join us 4 p.m. Eastern, so it's about 45 minutes from right now. I'll be on with Jamie from Mexico City. It's going to be fabulous. I'm really flattered that he decided to come on, and we're going to talk about what really is going on and about these now 4 million plus people that are part of Wall Street Bets. You don't want to miss it. Trust me, folks. Let's talk about RealReal. This was one of the stocks I talked about on the halftime report today. RealReal, the stock was 25.04. I talked about that aggressive buying of those August 25 calls. Now, 6,000 calls and they paid several dollars, as in like $6. That's a $3.6 million trade, folks. $6 is $600 each since every option is for 100 shares of stock. So if you buy 6,000 of those, 6 times 6, 36, you get the idea. $3.6 million trade. I want to be on that trade with these guys. It's an at-the-money call, so I want to show you the way that I traded. So there is RealReal. It's up 11% today. A lot of the luxury retailers have been doing extremely well. RealReal leading that group, but of course Poshmark came out with their IPO just a couple weeks ago, and it was up 140%. So yeah, there's a lot of interest in this space. Instead of buying those options for $6 or $7 or $8 and just holding them, even though the time decay is very slight for an option that is out there, this is the 8th month of the year, August. So these are a full 7 months into the future. nonetheless, I don't like being long those calls. I want to be long something else. So what I did was I jumped in here and said, you know what? I'm going to be long those calls and short the 40 calls. By doing that, if you follow me, you could see that I could be, for instance, paying $3.30, the difference between 770 and 440 or thereabouts. I'm saying $3.30 for a $15 spread. That's a 4-to-1 on cash or a 5-to-1 return if we're 40 or higher. Now we could also ratchet that down. I could sell the 35 and be in a 10-point spread. You get the idea. The differential between the strike prices is my maximum profit. So if I did the 25s out there against the 35s, that's a $10 spread, the differential between 25 and 35. And I would be paying even less, of course, because the 35s are trading for more money, probably more like 550 or maybe even 6 at this point. So in other words, I could put on a nice bet there, buy a 10-point spread, perhaps have $2 at risk. I've got a 5-to-1 risk on that one. So you get the idea. That's how I think about trading. Because again, I'm not that YOLO trader. Nothing against you guys and gals that do that. I'm just saying, because I've been at it for 39 years, I like to hit singles and doubles. I'm perfectly happy, just like you, hitting a 10x or a 20x trade. But that really isn't my game. My game is following the smart money. When somebody drops 3.6 million and puts it over here, I want to jump on with them, but I want to find a way, if I can, to mitigate that risk even more. That way, I stay at the tables longer, and I have a greater hit ratio by doing that. You have to decide what's appropriate for you. Here's our crypto broker, Voyager. I love this. I bought a couple 100,000 coins again last night on this site. Did I buy a couple 100,000 Bitcoin? No, I didn't. Those were one of the 50 other assets that they trade on this site. So in other words, if you want to trade Litecoin, if you want to trade Doge, if you want to trade Voyager itself, VGX, if you want to trade Bitcoin, Ethereum, Uni, you name it, they've got it. This is a great platform. I'll be speaking with my friend Charlie Shrem tomorrow about Bitcoin. That's for a future podcast. And Voyager is a company that we're both invested in. Invested in because we believe in Voyager. Voyager's commission-free trading, 50 plus assets, crypto made simple. I mean, you know, you want to buy any of the cryptos that are out there. These guys even pay you for leaving that crypto on Voyager. 9.5% up to 9.5% for that. I mean, come on. In an environment where they give you nothing on your money and you're in something the Fed can't just print more of, I like it. So Voyager is a Canadian on the venture exchange up in Canada listing. It also trades over the counter in America. And I believe they're trying to uplist right now. And when this one uplists, I think the stock is going to rock. I'm looking forward to that. It's not investment advice, but I own a lot of it. Jon Najarian, yep. If you want to send me a question, that's at Jon Najarian. If you want to send it to our @3 handle, it is @3 @3_UOA. That's for those of you listening on Sirius Satellite Radio. All right. So Aaron Moore, and I like reading off your Twitter handles because you guys are nice enough to send us a question. I'm going to be nice enough to cite your Twitter handle, which is @AARON_B, like boy, Moore, MOORE. Aaron B. Moore. He sends us a question, says, seems to be some activity in silver. Thoughts? Yes, I noticed the activity in silver options. I noticed the activity in SBSW that I talked about earlier. I like it. I saw my friend Max Kaiser was talking about silver, and he said, wow, what if we got all these Wall Street bets guys buying silver? This is a heavily shorted commodity. I'm not saying you're wrong, Max. Not a bad idea. However, there are 3 billion ounces of fine silver that are already in circulation. I'll just point out that 3 billion ounces times 25 and a half, it's in the mid $70 billion. worth of silvers floating around out there. I think we could see a squeeze in silver, but unless silver and gold are really moving up fast, I think the cryptos move up faster. So it doesn't mean I don't own it. I do. I trade silver, I trade gold, and I trade those cryptos. So that's just what I'm doing right now. My thoughts on the activity in silver, I like it. Let's get to Apple. Apple had a blowout quarter and the stock is down. This from Aaron Young. That's @AARONJUNG #3. Aaron Young says, blowout quarter, stock is down. Are you sticking with your lungs or would you be fading this name? I would not be fading this name. As you probably know, Aaron, if you've been listening, watching me at all, I think the future is very bright for Apple. They've retired billions of shares of stock. Well, perhaps not forever retired, but they've bought them back, which reduces the share count. When you're a share shrinker, I like it as a shareholder. I also love the fact that I can write options in this one and make 20+% for owning one of the best stocks on earth, the biggest stock, in fact, by market cap, and selling calls every week, every 2 weeks, every 3 weeks, every month. I ladder it in on 4 different time frames. As the front one expires, I roll it out to that 1 month call, and then I'm short 2 week, 3 week, and then out there further. I just do that over and over again, and I just love the cash flow. So if you're like me, 10x, and you want to get some cash flow, this is a great way to do it. As far as how you should trade, you have to decide. But am I fading it? Nope. China sales, what was it? 20, I think 21 or 22 billion versus 13 year over year. Come on. And that's with the pandemic. I love this stuff. All right, Charles Simmons. And Charles's handle is @CSIMMONS5054. That is CESIMMONS054. He says, when I started on the SIBO, you and a couple of others were considered the Larry Bird of options trading. Certainly not the Larry Bird of basket. So thank you very much for that, Charles. Thus, if you were selling calls to the public as a market maker, I was taught to hedge, but the stock. Thus, option market makers were mostly responsible for some of that lift. Yeah, you're right, Larry. The more they force somebody's hand, option market makers don't just sit there, folks, and fade your trades. What they do is they buy calls. When they're selling calls, they either buy other calls as a hedge or buy stock or sell puts. Now, in the case of GameStop, this one is, one for the record books. But nonetheless, for every option that a specialist would be selling in here, they would be buying some part of the stock. So if they're selling an option that has like a 20 delta, they need to buy for every 1,000 of those calls they sell, they need to buy about 200 calls, or they need to do about 20,000 shares of stock. Again, that's in the example of a 20 delta call. This is a wild ride, keeping up with that. You are right, Charles. If I was still on the floor, how would I have hedged this position? I would have tried to avoid it. I'm sure my clearing firm would have been coming down telling me, you know what, this is a hard to borrow stock. You already know that. But we know you're not shorting it. You're buying it. But you got to buy some puts. You got to snug some puts up underneath it. Because if you're selling calls and buying stock, that's a synthetic short put, folks. So I got to start buying puts to hedge my downside. Otherwise, if the stock reverses, and you might have seen that today, many of you, when it turned around from 513 in the pre-market, that's $513, and turns around and at one point was only 136 today, you could get cleaned out. So you have to own some puts because you're synthetically short puts when you're in a long stock short call position. So that's how I would have been doing it, Charles. Thank you for joining me. Thanks for being part of the SBO back in the day and that nice compliment. Cheers. Free. All right. Nima, and her handle is at NIMA-ABBAS, Nina Abbas. That's Nima Abbas, says a lot of people have been surprised to discover lately that commission-free trading isn't actually free. Yes, you are correct, Nima. I said this to Mark Cuban. I've said it to Scott Wapner. A lot of the people that shut down trading today, like Robinhood, that shut down trading of those Wall Street bets names. Number one, I think you're in trouble for shutting it down, folks. I don't know that you just have the right to unilaterally shut it down, no matter what your disclosure document says. Good luck on those arbitrations. Nonetheless, is the real reason Robinhood and others are banning opening trades in GameStop and other Reddit heavily shorted stocks because the firms will no longer pay for that order flow? Yeah, that's one of the reasons, because Robinhood is a free trading app. So if I want to buy options on Robinhood, and I am not a customer, nor would I be, but if I were a customer on Robinhood and I'm trading for free, yeah, it's free. But guess what? When all of a sudden one of those high frequency firms, I won't name, when one of those high frequency firms says, you know what, we're not going to pay you for that order flow for today or tomorrow until we tell you different, we're not paying for that order flow. And you're Robinhood, you can't execute that trade because you're having to pay to execute that trade if you can't sell it. So that means that you're digging yourself a hole faster and faster and faster by letting people trade a stock that you're no longer getting paid for because you're not charging commissions. So they'd have to instantly change everything about the platform and say, guess what, guys, we got to charge you for these trades. And all the people that have been trading for free would go, well, if I'm going to pay for it, maybe I'll go somewhere else. I think a lot of you will end up going somewhere else. And I think Robinhood is already in crosshairs, not only AOC, but also a lot of regulators. And I think that's not a good place to be. So, Nima, I think you're right. There is no free lunch. If you would like to learn more about how we trade unusual option activity, please go over to marketrebellion.com/UOA. That is marketrebellion.com/UOA. Keep in mind, folks, that in about, less than half an hour, I'm going to be on with this legend, Jamie, the founder of Wall Street Bets. And I'm going to be on with him talking about everything that you can imagine. So please join us. The half an hour, you got to go to Market Rebellion to not subscribe, just to sign up. It's free, and we'll push it out live as fast as we can. But we've only got a limit to whatever it is, 20,000 of you that'll be able to watch it for free until we have to stream it out and kick it out to the rest of the socials. So sign up now if you want to listen to and see Jamie and I talk about what's going on with Wall Street Bets, with Robinhood shutting down. This is the interview of the day. Make sure you join us. Bang, and thank you.